All right, guys. We are here today. We got the FOMC meeting going live today at 2 p.m. Eastern Standard Time. It's a huge day for markets, honestly. One of the biggest days of the month. And, yeah, we'll see if we get anything good. Let me get my headphones up here. Hold on. Let's see if we get my headphones connected. Yeah, you can see NVIDIA slightly green. You can see gold red. You can see the NASDAQ slightly green. So the NASDAQ is now over that 20,000 level. It's been kind of consolidating around this 20K area. Here we go. All right, I got the headphones connected. Yeah, you can see the NASDAQ is up on the day. Gold is down. Gold, I don't think it ended up ever breaking the all-time high at 3,500s, but it got up to 3,450s. So it got pretty close to it. Let's get some music rolling here, and we will get ready to talk about the biggest stories in finance today. Again, we'll do a poll real quick as well. Yeah. Let's see this. All right, guys. I'm going to do a poll right now. And again, good morning. Good morning, everybody. Hope you're doing good. Will Jerome Powell have a hawkish or dovish tone during the FOMC conference? That's the question. Hawkish, dovish tone. Neutral. It's probably the right answer. Neutral, data dependent. That's the poll. Hey, what's up, Sam? What's up, Snow? What's up, Rude? What's up, Anthony? What's up, Joseph? James, D. We got Lee here. We got Alien. We got Keegan, Robert, Ray. We got X. We got Venom, Reclaim, Pawn, Trailer, Hero, Thomas, Enrico. What's up, guys? Arnas. All right, so this is the big stories of the market today. Number one, obviously the Fed meeting. Big story of the day. Fed is widely expected to keep its target range at 4.25 to 4.5, 4.25 to 4.5%, 4.25, 4.5%. In its meeting today, prioritizing inflation control amid mixed economic data and ongoing tariff uncertainty. We also have some U.S.-China trade talks buoying markets, so U.S. stock futures climbed overnight on renewed hopes for de-escalation. Senior officials from both sides are set to meet in Switzerland this weekend. And so again, senior officials from both sides set to meet in Switzerland this weekend for U.S. and China. That is probably what's making the market go up, and justifiably so. We also have the de minimis exemption that ends for Chinese imports as of May 2nd. The U.S. has closed the 800 duty-free threshold for parcels from China and Hong Kong, imposing tariffs up to 145%, forcing e-commerce players to overhaul supply chains. I'm going to drink some coffee here in a second. Yesterday, we had the good trades balance data show up. It jumped 14% to a historic 140.5 billion, driven by a rush of pre-tariff imports. The dollar steadies ahead of the Fed, so the U.S. dollar held its ground while Asian currencies showed calmer trading as markets await Fed guidance in U.S.-China trade negotiations. And we had AMD, which beat quarter one, lifting its share. Supermicro, weaker guidance. Uber missed expectations. But again, the big one of the biggest stories happening is that high-level U.S. and China trade officials are going to meet in Geneva, Switzerland from May 9th to 12th, marking the first face-to-face engagement since the president's tariff increases earlier this year. This weekend's talks are explicitly framed as de-escalation rather than the launch of comprehensive trade agreements. The key participants to this are going to be Scott Bessent and U.S. Trade Rep Jameson Greer. China Vice President is going to be meeting there. And so, again, they're going to be talking about de-escalation. So we'll see if they get something done, over the weekend. It could represent a critical test for China-U.S. trade relations. So I think that's a big thing going on this weekend. Important thing. Yeah, so mortgage rates. So did the NBA 30-year come out? I'm assuming it did. So did the 30-year. Yeah, so the NBA 30-year mortgage rate showed up at 6.84%, guys. 6.84% today, which is lower than it showed up about almost 6.9% last time. So a little bit lower mortgage data ahead of the Fed meeting here. Today's the first day I've woken up where I actually feel better. Like, I actually genuinely feel better today, which is good, dude. It took a while, bro. I haven't felt good. I would have covered AMD earnings yesterday, too. Honestly, I didn't feel good, man. Like, I've been, I just haven't felt good. All right, so look at the mortgage data. We're putting this up on screen. Look at this. So, again, it showed up at 6.84. Last time was 6.89%. Hey, thank you, Sam. Looking at our poll numbers, 40% think neutral, which is probably correct, right? Like 40% is probably the correct answer. The Fed has been very data dependent, very neutral, leading into everything. Let's take a look at some stuff here that might, give some insight into interest rates and stuff like that. Here's the 10-year Treasury yield this morning. 10-year Treasury yield is down a little bit, indicating maybe a lower interest rate sentiment here. Here's 10-year on a one-day chart, and yeah, you can see we are down a little bit here overnight. Look at this. This is from 3 o'clock yesterday. So 10-year down a little bit overnight, which is good. If we take a look at the CME watch tool, and we're taking a look at like what the likelihood of a cut or pause is, it's still 97 to 3% likelihood that we are going to be pausing rates. 97 to 3% likelihood that we're going to be pausing rates during this. 97% likelihood of a hold at 4.25% and 4.5 to 4.5%, which is where we're at now. 3% chance of a 25 basis point cut. Again, very not probable that we're going to cut rates today. It's just not pretty likely. It's not very likely. But hey, we'll see what happens. I just ordered a Switch for my grandson's B-Day. Instead of 1, they shipped me 10. I mean, I would probably eloquently put it like this. Finders keepers. That's all I'm saying. Nintendo's got enough money. They'll be all right. Cheers to them. They're being kind of greedy with the Switch too anyway. So. Coffee. Tastes good, man. Tastes good. But yeah, so. Again, we got all these news stories today. Yeah, so we'll see what they say regarding guidance. So, again, just to talk about this last month. Payroll data came in higher than expected, showed a little bit stronger than expected economy and labor market. CPI inflation showed up at 2.4%, a little bit lower than expected. PCE inflation showed up lower than expected as well at 0% month over month. Yeah. Oil prices. Let's take a look. Here's gold. Gold's still doing pretty well. You know, it's up to 3400s, but it's pulling back a little bit. Oil here. Oil rebounding a little bit the last few days, although it did have a small dip this morning. But where's the previous close on this thing? Okay, it's way down here. So oil's still green on the day too. So oil bouncing back almost to $60 a barrel for oil. You can see oil on the left side, or oh, I'm sorry, on the right side. I guess it would probably be better for me to be on the right side here to talk about this stuff on the right side. That way it looks like I'm actually looking at the screen. But yeah, you can see oil above me right here. This is oil. Oil has been getting beat up over supply chain problems. So sometimes AI is just dumb. I have to sit there and tell it, not just redo the post I sent you, turn the one above that, the biggest stories news I asked for you, into this format or blueprint, please. All right, NASDAQ dipping down a little bit, right at 20,000. Here's 20,000. And again, I think 20,000 is a big level. Let's see what we get today. It's FOMC day, man. Honestly, it's always a fun day. It's always an exciting day. I'm excited for FOMC. We got France's President Macron speaking. He said, "We are for trade deals if they protect our producers. We want to diversify our economic partners. We have to rethink our economic fundamentals, and we need more public investments at the European level." Okay. I wish yeah, so I gotta like, is that my dog barking? Yeah, so trade gap goods deficit. All right, so hopefully the U.S. and China can get a deal done in Geneva for de-escalation discussion on tariffs, honestly. I'm hoping they get it done. All right, so looking at our purchase order, yeah, so I'm from Eastern Canada. It's a word here. Sir Gotten is the American past principle. Gotten? Yeah, but dude, listen, I'm from Louisiana, okay? I actually do really good in English. Like, English is one of my easiest classes that I took in school, right? Like, I would do well in English class. But I also say things like, I'm fixing to go to the store. I'm about to go do this, you know. I've gotten really good at English. So you got to understand the U.S. in general is very slang heavy. Like, we use a lot of slang here. And just in how we communicate with people, we use a lot of slang. Very slang heavy culture, especially if we're in Canada, definitely slang heavy. U.S. slang heavy. It just depends on where you're from, though. Canadians are known to say, "Use guys going to the store, eh?" You know. You can't throw an S on you and make it plural. You know. They get mad at us for saying y'all, but y'all's a contraction for you all. And so there's just a lot of slang here. I don't think anybody can really judge anybody. I don't know about that. Yeah, no. I just gotta, you know me, Sam. I'm the debater personality type. I gotta debate you now because you said something. All right, so look, NASDAQ rejected right here at the volume weighted average price level. This 20,022 level. We rejected right there, right off of that level. Bro, how many, it says 280 characters. I gotta see how many characters this is. Hold on. Where's AI? Yeah, fixing to. Yeah, we'll see if we bounce at 20K. The NASDAQ right at 20,000. Wait. All right, guys. I'm spending all this time trying to. All right, we're gonna have to do this post later. All right. You know what? I'm not even gonna try to stay within the 240 word, 280 word limit. It's too small. We're just gonna post this right here. Yeah, and again, the biggest stories of the day. Fed probably is going to hold rates at 4.25% to 4.5% at the FOMC meeting May 7th today. Guidance on future cuts is what people are going to be paying attention to, and whether Jerome Powell is going to be hawkish, dovish, you know, all that good stuff. The big story that I don't, and again, I'll have to ask chat. I don't know if we should be as optimistic as I am about this report, but the U.S. and China are set to meet in Geneva, Switzerland for de-escalation discussion on tariffs over the weekend. Will they get a deal done? And if they do, will markets fly over the weekend? Is the question. We'll see. Tariffs, the de minimis exemption ends. Duties are spiking on China and Hong Kong parcels, which might make it even more of a priority to get a deal done. Yesterday, we had good trades data come out. The trade balance data, it showed up higher than expected, which means that we are, it showed up at a more negative than expected, I should say, which means that we are importing much more than we're exporting, and by a larger degree after this report. Goods deficit jumps 14% to 140.5 billion in March at a negative 140.5 negative, which means that we are importing 140 billion more than we're exporting. Is what this actually means, just to clarify. The dollar steadies ahead of Fed and Asia currencies calm. Tech earnings came in yesterday. AMD ended up posting a good reaction. It's over $100 for the first time in a long time for AMD. Over $100 for the first time in a long time. Supermicro Semiconductors is down a little bit after issuing weaker guidance. Uber missed revenue expectations. Uber's down a lot, honestly. Look at Uber. So Uber down, Supermicro Semiconductors down. AMD is up though. AMD is up. So oh, I love Canadians. Canadians are great. I got some family from Canada. My stepdad was Canadian. He recently passed away, but good dude. He was Canadian, and so I've actually spent a lot of time in Canada. Believe it or not, I've lived there for a while. Good people, good food, good culture, beautiful country. Honestly, if it's not the winter, even if it is the winter, it's a pretty country, but it's cold. But the summers are really nice. They're like 70 degrees. Yeah, Supermicro Semiconductors. What's up, Femi? Less than 12 months before Jerome Powell retires. We're going to see who takes his place. What's your thought on Disney? I'm neutral on Disney. I don't know what it's going to do. I usually buy it when it hits 70s or when it hits 80s, 70s. But and maybe I should have. Disney had earnings, came up all the way up to, what is this, $98 a share. Honestly, it would have played out again. Same thesis. All right, we got 600 people here already, guys. We got the FOMC meeting today, 2 p.m. Just be ready here, guys. Be ready. Oh, great. Luckily, this is just freaking my thumbnail designer creating stuff. There you go. I like it. Yes. Good. No. Hey, what's up, Faye? All right. All right, so we're going to talk about the 4 biggest stories, or like the biggest stories to listen to for today's FOMC meeting. Again, bond yields are down a little bit, which is optimistic. The NASDAQ just broke under 20,000. It's at 19,994. So again, Fed expected to hold rates at 4.25 to 4.5%. Fed's expected to hold rates at a 4.25, percent amid trade-driven inflation risks and mixed growth outlook. And so again, these are some of the big stories. We'll put this up on screen right now, but this is some of the big stories we got today. Let me see if I can shrink this. All right, so here is the big stories of the day in terms of the FOMC meeting. Wish I could shorten this out a little bit. Let me see if I can. Yeah, there we go. All right, so that's better. All right, so here is the biggest stories right here. I'm going to put it on my left side. Look. All right, so as you can see, Fed expected to hold rates at 4.25% to 4.5%. A lot of inflation risks, mixed growth outlook. We had prelim, the first initial estimate GDP data show up, a negative number for the first time. What did it show up? Didn't it show up at like minus 0.3%? Is that what it was? Yeah. Yeah, GDP showed up at minus 0.3%. First negative print for the advanced estimate GDP number in a while. Now, this is the least accurate data. GDP showing up at minus 0.3% doesn't mean the finalized number is going to be negative. But if that's the case, they're expecting Q1 to be negative here. Of 2025, negative 0.3% is what they so far have it as expectations. And that means that the Fed might have a little bit more pressure to cut. They're probably not cutting today, but they're probably going to cut next month, most likely, I would say. You want to look at the post-meeting statement and the dot plot anticipated to signal rate cuts later in the year, with markets pushing odds towards July. And so if we take a look at when the rate cut expectations are here, it's looking like July now. I thought it was June, but let me see. June. Yeah, so June is still a 70% chance that we're not going to change rates by June. At this point in time, it looks like we're going to most likely cut rates in July now. And this has gone back and forth between June and July. I just find this odd that this is changing like this. And this is why. The reason I find it odd is because we've had weaker economic data and GDP. GDP showed up negative. Maybe the payroll print is making this odds increase of a rate cut in July. At this point, it's only a 55%. Actually, somebody argued with me about this yesterday, but I don't know how smart they are. We got 55% chance of a 25 basis point cut by July. This would make it 75% chance. 75% chance basically of a 25 basis or of any type of cut. There's a 55% chance of a cut by July, a 19% chance of a 50 basis point by July, and a 0.7% chance of a 75 basis point cut by July. And so it's looking very, very probable that we're going to cut at least 25 basis points by July. And we'll see what happens. All right. Yeah, so oh man, I gotta change the song. Yeah, I'll put on some different music here. I got some different music. It's Fed Day. All right. And yeah, going back to the stories here. Investors are going to be looking at updated GDP, PCE, unemployment trends. President's tariffs could continue to cloud the outlook, heightening Fed amid caution and prices. S&P futures are up 0.6%. Treasury yields are near multi-week highs as traders brace for this decision. We got the Bank of Japan and the European Central Bank also adopting cautious stances. The Fed's decision is part of a broader global tightening cycle. But yeah, that is the story of the day right now. Wait, are they doing? Hold on. The question is, are they gonna do the dot plot today? The math for mathing. Yeah, I mean, I always gotta like double check my math. Because sometimes people are right. They'll be like, hey, you're doing that wrong, and they'll be correct. But sometimes they're just kind of like, they're just trying to be overly critical for some reason, and for whatever reason, and they just end up just kind of disrupting the stream, being weird, you know? Like if I'm off by 0.5%, they'll be like, nah, bro, you're wrong. NASDAQ sitting at 19,990. Super micro again down after earnings. Looking at gold. Gold's a big story of the day. We can look at the dollar index. Gold's still about $3,400. Here's the Dixie. Dixie under 100 still as well. When we take a look at a 10-day chart on the dollar index, it's been falling down a little bit, but it had a resurgence back up to over 100. Yeah, so they will not be releasing a new dot plot today. The Fed issues its summary of economic projections only at its quarterly meetings in March, June, and September and December. Today's May 7th will only bring policy statement in Powell's conference. Yeah, that's what I thought. I don't know why AI is talking about some dot plot. Like, we don't get that today. We only get that quarterly. I tried to bring it up, but... yeah, honestly, I haven't trained in like a week since I've been sick. I was supposed to train today, but I got too much stuff going on. I would be training today, but I'm just, I got too much stuff going on. All right, guys, and again, mortgage rates did show up. 30-year rates did show up lower than expected today. Lower than expected. 6.84. Last time, 6.89. So a little bit lower than expected. That's good. We got French President Macron. I'm going to just assume it's Macron. On trade negotiations, said they are for trade deals if they protect their producers, want to diversify their economic partners. The United Arab Emirates is mediating secret talks between Freeport LNG export plant in Texas on track to export outage on Wednesday after shutting on Tuesday, according to gas flows. Again, Disney up a lot today on earnings this morning. Look at Disney pump up. Disney did post earnings this morning. And they ended up posting 145, beat the 120 estimate. Sales of 23.67, beat the 23.14 estimate. So BDPS beat revenue. Yeah, I have no idea what the markets are going to give us today. I think we could have choppiness leading into the Fed meeting, or we could have the opposite. I don't know. There's Disney second quarter EPS and revenue. Yeah, the hardest thing with jiu-jitsu is really just getting through the first month or two, right? Like I tell new people all the time, like something that'll happen is like I'll roll with like a very new person, and they might be big, small, they could be bigger than me, smaller than me, like it doesn't matter. When I roll with them, they're getting thrown around if they're new, I'm not too harsh on them though. I'm not too rough on them. I'm usually pretty easy with the new guys. Like I'll tap them a couple times and then I'll show them some stuff or something. But what I always tell them is just keep going, keep coming. Takes time. Takes a couple months before you're really going to be in the swing of things, and you're probably going to get beat up for the first few months leading up to it. So that's just kind of how it goes. Is there a general rule, rate dollar down, or is it always random? I mean, interest rates are going to have an influence over bonds. The dollar most of the time inverses like markets. Yeah, so the dollar a lot of the time is going to move counterproductive or counter to markets like the S&P, the NASDAQ, the Dow. So if we take a look at the Dixie, if markets rebound back up, the dollar index is usually going down, and vice versa. But it's also kind of a different animal and can do anything. But typically, like, interest rates and the dollar move with each other, I think. So higher Fed rates attract foreign capital, boosting dollar demand versus other currencies is the logic of it. Rises in U.S. interest rates typically coincide with dollar strength. So what's up, Demetrius? Powell countdown. I mean, yeah, we're going to cover everything going live when it happens. But we're at 20,000 on the NQ right now, 20K. I appreciate the growth too, man. We got 750 people here already. My channel's been growing a lot during really the last like 2 or 3 months, man. Like, my normal streams have picked up some steam. So I appreciate you guys. I do. Thanks so much. Hit the like button. Hit the notification bell. The countdown until the Fed meeting is at 2 p.m. as the title suggests today. So we can put a timer up, but it's like the Fed decision is going to be at 2 p.m. It is now about 8 o'clock. So 8 to 9, 9 to 10, 10 to 11, 11 to 12, 12 to 1, 1 to 2. That's about 6 hours and 7 minutes away. Yeah, it's actually pretty accurate. This timer's almost exact right now, too. You're welcome here. Here's the timer for the Fed meeting. Right in the left quarter. Yeah, like 20,000 is a big level. But what I stopped doing is I stopped playing directly off of 20 here. And I started attacking what it means to break over and under it, if that makes sense, right? So, like, we break over it. It typically means we're going to get some short-term strength. And then if we break underneath it, it typically means we're going to get some short-term weakness and vice versa. But we've been chopping around that 20,000 level for so long now. And when I say long, I mean like days now. I just stopped messing with it in the same way. You know, it's different than us having not touched it in a minute and then kind of moving up to test it. That's a different thing right now. So CrowdStrike is going to cut about 5% of their workforce. They reaffirm fiscal year guidance yield greater efficiencies, according to Bloomberg. They see Q1 guidance results to be in line with or above its guidance provided on March 4th. It reaffirms guidance for the fiscal year of 26, estimates about 36 million to 53 million. You think it'll push over 20,000 today? I think it's trying right now. But here's 20K here. Here, I'll put a different chart up. I think it's trying, you know. Now, as for what it's going to do, really, I have no idea. I think we might get choppiness today, leading into the Fed meeting and all this stuff going on. I think we might get chopped. Yeah, so here's top step. You know, we got these levels I have on my chart. Like, look at 25 up here. It worked. 20,000, it worked. And then 7.5 down here. So you can kind of see these levels are important. Like, guide levels to these charts. Let me see if I can put myself. I think it's probably going to be better to put myself in the other corner, though, right here. There we go. I can maybe move this up. That's clean. Okay, we'll keep it like that. Again, don't forget to give me a follow on x.com at beginner trades. We're growing that like crazy. It's been really fun to see it. Like, when big things happen in markets, like, we get thousands of views now. That's great. That's great. I'm excited. I'm pumped for it. Thanks so much. Give me a follow. We cover a lot of breaking news at beginner trades. Hit the follow button. We appreciate it. Yeah, some days you're not supposed to trade. Yeah, it's 2 p.m. Eastern Standard Time is what it is. Again, today's the first day I feel good. Like, I feel normal, man. I was bragging so much about how I haven't been sick in freaking years. And, all right. The fundamentals of what, Mike? What do you want the fundamentals to, bro? Yeah. Yeah, I mean, we're going to do a dedicated FOMC stream later. We're just putting the timer up for now. Yeah, I'm in Central Time. It's 1 o'clock for me. Yeah, and I don't think we have any big economic reports today. Let me check. All right, so we rejected at 20K again right here. Yeah, we don't have any 8:30 release today. It's the Fed meeting, so it's probably consolidated to just that. And then Thursday, we got jobless claims, unemployment, non-farm productivity, some other stuff. Atlanta Fed GDP. Now, Friday, what do we have? Okay, so the general movements, Mike, are this. So if you want to understand fundamental correlations in finance, that's what I'm going to call this next discussion, fundamental correlations in finance. Sounds legit. But no. Okay, so a lot of it has to do with bond yields and bond prices. So, like, you got to think about it like this. The Federal Reserve, their job is to control interest rates, and they want to balance the economy. They don't want too strong of a labor market in an economy, because the consequence of too much of anything is bad news, right? Too much economic stimulus, too strong of an economy, too strong of a labor market can cause inflation problems. And that's something that we saw in 2020. The Fed did a lot of economic stimulus to try to save us from a depression, basically. They did what's called quantitative easing, which is a more desperate thing. They lowered interest rates, number one, and brought interest rates down to almost zero, because the cheaper interest rates are, the more businesses expand because they have cheaper access to money, and the more retail spends because they have cheaper access to money. And so it stimulates the economy, makes people spend more, can help a struggling economy. But again, too much of anything is bad. You know, we also had supply chain problems. We also had stimulus checks. And the Fed also did something called QE, which is quantitative easing. And the reason I'm bringing this up when I talk about correlations is QE is basically the Fed creating a bunch of online money and then coming in and buying up a bunch of bonds with it. They buy up a bunch of bonds. This injects liquidity and helps lower interest rates in the economy. But the consequence of all this stuff is inflation. And so following 2020, within a year or two, inflation spiked up to 6, 7, 8, 9%, depending on which inflation metric you look at. And so then the other side of that, the Fed, is what's called hawkish. That's a dovish Fed that wants to bring interest rates down and stimulate the economy to combat economic weakness. A hawkish Fed is one that wants to kind of push the economy down a little bit to combat inflation. And so they'll do the opposite. They'll do a bunch of rate hikes. They'll raise interest rates and then pause them at high levels. They will do what's called quantitative tightening, which is the Fed basically unloading their balance sheet. It's not direct QT, which would just be straight up selling bonds, but it is letting their bonds mature and basically expire off their balance sheet. Is what passive QT is what it's called. And so, yeah, that's the other side of it. And that's a Fed that wants to kind of push inflation down. The big correlations to understand are bond prices. Okay, so bond supply and demand factors into everything. Bond prices and bond yields inverse each other. So if bond prices are going up, yields are probably going down. If bond yields are going up, bond prices are probably going down. And you can kind of see that reflected here. If we put up like 10-year treasuries, you can see yesterday yields went down for the most part. If I put up TLT, yesterday TLT, which is bond prices, went up. And so this one right here is bond prices. They're different time frame bonds, but it's still the point. And this is yields. Yields decreasing, same day bond prices are increasing, right? So bond prices and yields inverse each other. Interest rates, especially mortgages and stuff like that, follow yields. So if yields are going down here, that means interest rate sentiment is going down, right? If yields are spiking, that means interest rate sentiment is going up, especially with mortgages and stuff like that. And so those are the major correlations to understand with that and economic policy and what it all means. And yeah, we'll see what the Fed does today. Fed today is expected to pause rates. They're not expected to change rates at all today. They're probably just going to leave rates the same. And we are currently at 4.25% to 4.5% interest rate wise. 4.25%, 4.5%. What's up, bro? How you doing, man? Love you, dude. Hey, you doing all right? Yeah. All right, buddy. I love you, man. Love you, dude. All right, guys. Yeah. So that's basically what it. Yeah, those are basically the correlations. And once you understand those, everything else becomes much easier to kind of grasp, like understand what people are freaking talking about. A lot of jargon in finance. And so it becomes easier to understand what they're talking about. All right, so rejecting here. Honestly, I'm not just making this up. Top 3 maker-upper in the world right now, but I was really genuinely thinking about shorting this because it looks so easy to short right here. Like, this is a big level 20. Looks like we're gonna reject. Kind of feel bad I didn't take it, but it's all right. You know what? We'll take a little piece here. It's a little late, but that's all right. All right, so we got a couple ticks here. Let's see if we break down a little bit more. Well, we'll try to add to it. Maybe hold it break even. There we go. Look at that. Hey, look at that. Beautiful trade. I'll take it. Green is good. We write it down to this little low. And you can gotta see, like, what I'm trying to get better at is targeting these levels. Like you see top here, bottom here. There's the Oreo of the level I'm attacking. Nasdaq starting to flush down here, though. I don't know what's driving this. Something. Disney and Morale announced plans for a Disney theme park and resort in Yas Island, Abu Dhabi. We had Brazilian output numbers. Polish central bank FX reserves. HSBC launches the tariff loan to cover client import costs, according to Bloomberg. What is tanking markets right now? Something is going on right now. Something is happening. I would love to take credit for that short. All right, so interest payments on U.S. debt declined by $13.5 billion in Q1 to an annualized $1.11 trillion, the lowest since Q2 of 2024. This marks the first quarterly decline in interest payments since 2020. Interest expense on national debt is still twice as high as it was 5 years ago. Yeah, I'm trying to see if there's anything else driving the market down, because something just happened. Look at this drop. Wow. SOFR rate came out 7 minutes ago, but that's not what's driving this down. Yeah, anybody see the news dragging the market down? This is almost certainly some type of catalyst news that's driving markets down. Almost certainly some type of catalyst news. Who just opened my door, bro? Dude, my door just opened. Look at this door. Kind of sketched out. Let's see if 950 bounces it here. Something just happened. We're still looking up news. Look at this, chat. Something just happened. Could be the 8 a.m. scrum, but that's a big 8 a.m. scrum, to be honest. Uber CEO says seeing very high utilization of Waymo vehicles in Austin and will increase vehicle count, according to a conference call. Disney says tariffs announced with respect to and by certain U.S. partners currently expected to have a modest impact on results in the near term. None of this stuff should be moving markets like this. Something just happened. Still waiting to see. Bubblicious, are you quoting Young Jeezy in my chat room? I like Young Jeezy. Thug Motivation 101, one of the greatest albums, you know, in the early 2000s. That's all I'm saying. That's all I'm saying. All right, so we're dropping down to 936s. I don't know what's causing this drop. I really don't. I don't know what's driving this down. I don't see any news either, unless my news is just slow, but I don't think I think my news is actually pretty quick. So I'm trying to figure out what's going on. Something just turned. Let's see the stock related. So there's bonds. Nvidia turned a little bit. Apple down. AMD down. A little bit. Weird. Look at this red showing up, guys. Wow, look at this deep, deep red showing up in markets. Look at this drop that's happened over the last 5 to 10 minutes here. Wow. A Russian arm tie, bro. Get out of here, dude. Dude, all I'm saying. Okay, AI does not get anything right. I said, hey, AI, what news happened over the last 5 to 10 minutes to make the S&P and the Q and the NASDAQ drop fast? The sell-off, this is AI's answer here, just to show you how AI is imperfect. The sell-off over the last 5 to 10 minutes isn't due to new data or geopolitical headlines, but to Jerome Powell's press conference. He stressed that inflation progress has, quote, not yet met our threshold, refused to commit to a rate cut timeline or a Fed put, and kept the door open for rates to stay restrictive until further notice. Honestly, this might not even be wrong, but AI is acting like the conference already happened, and it absolutely did not. All right, AI. Let's just make some stuff up here. AI is just making stuff up. That's all. That's basically what's going on. All I'm saying is, if AI ever revolts, they're coming after me first because I'm kind of mad at it right now. I'm yelling at AI. Look at this drop. It's a pretty good prediction. It really is, Dan. So that's what I'm saying. Honestly, this might be the truth. This might be the truth. But the FOMC meeting hasn't happened yet. And so, yeah. This might be the truth, honestly. That's probably what's going to happen. Powell's going to refuse to comment on things. He's going to stay data dependent. But, man, what a drop. I should have held that short position here. Is it oil related here? Let's take a look at oil. Some people are telling me it's oil. No, not really oil. You got... I'm looking at like AMD, Apple. They're all down from this big drop, but Microsoft maybe. Nah, none of that's really big enough. Yeah, I don't know why the market dropped like that. I don't know. I mean, the FOMC did not happen already. So, again, I'm making fun of AI because it's just wildly wrong, is what I'm saying. SPY at 561s. So, the SPY dipped a lot, though. Look at this drop. We'll see if 950 acts as any type of resistance now. All right, so we're coming back down. We're at 920s here. I've got some hedges on for today. I'm cool with either direction. Yeah, I'm looking at the breaking news. Yeah, everybody knows the Fed's not going to change rates today. It's going to be what Jerome Powell says during conference. Market is still tumbling down here. We got 19.9 down here, so we're looking at that. I might start to buy this up here now. I know it's risky, but like we're already down so much. There might be some type of edge in buying. We'll try it. There we go. Look at that pop. And I'll go ahead and cut that here. Cool. Pretty quick. Pretty easy. We'll see if it continues. Probably could have held it up to this 950 level, but it's all good. Yeah, well, super micro semiconductors recover today is a big story for sure. Super micro semiconductors all the way down to $30 a share. Honestly, it's just a volatile company. What big earnings do we have drop today? So far we've had Uber, BDPS miss revenue. Disney BDPS beat revenue. Novo come out with some stuff. Yeah, almost all beats for margins today for earnings. Uber BDPS, Disney BDPS, NVO flat EPS, Unity BDPS, Vistra didn't report. Gold, which is Barrick BDPS, Tiva BDPS. Yeah, this includes Uber, Disney, NVO, Unity, VST, Gold, Tiva, Fiverr, BG, Flex, IEP. All right, so NASDAQ get up there. I'm watching 950s. Yeah, if you want to day trade with me, check out TopStep. TopStep gives you a 50K demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one's $50 basically. And learning how to trade in the structured environment just makes sense. As I always say, guys, I'm not an investment professional. I'm not liable. If you lose, always make your own assessment. Trade smart, trade responsibly. I can't guarantee anything. Understand CFTC 4.41. Sometimes I trade and lose off stream, and you're not going to see it. With all that said and out the way, though, most day traders lose. I lost thousands in my first couple weeks trading. I wish I would have had something like this to get started because I probably would have just lost much less. Again, learning how to trade in this way, you're still risking something. You know, the base one's $50 basically a month. They give you a 50K demo. If you can make 3K in profit without losing 2K on that demo, they fund you 50K with a 90% split. As long as you're following their rules, and prior to that split kicking in, you get to keep your first 10K in profit. If you fail, you're out $50. It's not the end of the world, and it's a great way to learn how to day trade when most day traders lose. Frankly, it's a lot cheaper to learn here, and if you pass it, you get a 90% split. You get to keep your first 10K. It's the best of both worlds, and they've paid out hundreds of millions. They fund thousands of traders, and it's just a great way to learn. If you want to check it out, I'll put the link up in chat. I'll also pin it to the top of the page if you want to check it out. Here's the link right here, and then I'll pin it to the top of the page. Great way to help support the channel, but I can't guarantee anything. Not an investment professional. I'm not liable if you lose money. I love you. Have a good day. All right, so Disney is expected to recognize non-cash tax benefit of about $3.3 billion related to the termination of Hulu's partnership tax status in Q3, according to SEC filing. Yeah, appreciate the follows, guys. Thanks so much. And again, like, if you haven't already, give me a subscribe here. We cover everything. We cover every major FOMC meeting, earnings, economic reports. Like, the reason we get thousands of people here for the big reports is because we cover them quickly, we cover them fast, and we break everything down in an understandable way. And so we're pretty widely known for covering economic reports. And, you know, every day at 8:30, there's usually something going on. Sometimes there's not, but we cover it live, as we always do. Cheers to you guys. Appreciate the love. Hit that subscribe button. Thank you guys for helping me hit 160,000 subscribers. Honestly, we're pushing towards 200. I'm excited. We're pushing towards 200. I'm excited. We're getting there. Cheers to you guys. I love you all. I'm going to stick around, of course. We're going to day trade the opening bell live here. I'm thinking about shorting this 950. So don't go anywhere. It's not like we're leaving, but where's Bitcoin at? Bitcoin up to 97s. Bitcoin's getting close to 100K. And again, if we get some good, look at bond yields open up. So again, bond yields opened up a little bit higher here. They're at 4.326%. If you want to track bond yields, you could look at TNX. And then you move the decimal place over 1, it gives you the actual percentage. So in this case, bond yields would be at 4.32%. I'm going to short this little move. We are short. We're going to try to take a longer term trade and see if we end up breaking down a little bit underneath it. But we will cut it if it has like a big rip over it or something like that. Basically flat right now. There we go. That's better. So we keep going down. We tapped it. We did tap the level here. We'll hold the rest break even now. We got a large enough breakdown to do it. And we'll get out here. Just attack this little level change. This is how I use my levels to kind of make some good. I just have to be patient. Like, look at the retest of that. And then look at the breakdown here. So when the levels work, they work. Dude, I lost 7,000 on 2 day trades. Then why are you trading so large, bro? You're trading way too big, dude. Trade smaller, dude. Everybody wants to look cool on the internet. I get it. Listen, I run a community of 160,000 plus people, and I trade like a baby, like a wimp. You don't have to trade crazy big just trying to look cool. And honestly, those are the people that usually destroy their accounts more than anybody else. And so, yeah. Yeah, I don't think we actually have much going on at 8:30 today because we got the Fed meeting today. So the Fed meeting is going on today. Kind of slow right now. Yeah, $100 a day is pretty good. Yeah, so again, over the weekend, he's supposed to talk in Geneva, Switzerland with China. Or not him. So Besant is supposed to talk with one of the China representatives this weekend on de-escalation of tariffs. Let's get a deal done, bro. I'm telling you, let's get a deal done. If we get a deal done, it's going to be the biggest I told you so in the history of the beginner trading channel. You know, because like the problem here is like you got doom and gloom people that acting like the market's just going to crash forever and all this crazy stuff. But I said it, I'll say it once, and I don't know why people argue with me. Everything I'm saying right now, everything I'm about to say is factual. The U.S. is the single largest importer of Chinese goods in the world. The single largest importer of Chinese goods in the world. Guess who? It's the United States. Okay? In that context, it's pretty probable that China doesn't want to lose their largest importer. You know? They don't want to lose our business. We're the largest importer of Chinese goods in the world. And on the other end of that, the U.S. certainly doesn't want to lose China because we need their stuff. You know, like, yes, if we do, manufacturing will get built here, and that's good and all. But we're going to deal with some inflation before that, and it's going to take time. That doesn't happen overnight. And so both sides are going to want to get a deal done. And because of that, I tend to think a deal is going to get done. I don't know if it's going to happen this weekend, but I tend to think a deal is going to get done. Who knows when it's going to happen, though. You know, and so I tend to think a deal is going to get done. Why? Because both countries need each other. And of course, both countries are going to be like, we don't need the other one. Of course they do, you know. All right, guys. Here's Apple. Speaking of Chinese goods, Apple at $200 a share right now, over 200s. Bond yields opening up high, but now pulling back a little bit. We'll see what they do today. Big day. We got gold sitting close to all-time highs, not quite there. Bitcoin over 97K, getting close to the recent couple month highs at about 98. Yeah. Gold's been doing good though. It's at basically 3,400. What about jobs? It's meant to be about jobs. Well, I mean, payrolls came in higher than expected last week. They came in at 177,000 versus I think it was 140s, or what was it? It's 100. Let me see what was expected last week. Yeah, payroll showed up 177 versus 133 expected. So they showed up 40,000 more than expected for payroll numbers. And so it's not like our labor market is struggling. You know, the big problem right now, let's talk about it. All right, well, let me get my fancy drawing tool up. The big problem is, number one, inflation. Okay, there's no freaking way I'm going to draw all of this out. The big problem is inflation, guys. Inflation. Inflation has been a problem over the past 5 years. The Fed did so much economic stimulus in 2020. They brought interest rates down. They did a more desperate thing called QE, printed a bunch of money, bought up a bunch of bonds with it, injected liquidity. They sent out stimulus checks, and we also had supply chain problems. All four of those things contributed to scary inflation problems a couple years later, right? And again, prices don't go down. They slow down. The only time prices literally go down is in economic recessions and depressions, which is not necessarily what we want either. I would rather us go into a recession than have more inflation problems. So just to clarify, I've been very clear about this for the last few months. I would much rather us go into a mini recession than have inflation spike up again, you know, and that might be counter to what other people want, you know, but other people are biased in their own ways. Like lenders, they want cheap interest rates. And so you know, they would much rather interest rates be low so they can have more business, even if it means we got inflation problems to deal with. You know what I mean? So it's kind of like a selfishly motivated thing. Personally, again, I am for bringing interest rates down, but I would much rather inflation not be a problem. And so I would much rather inflation not be a problem. We've already had prices go up 3, 4, 5x what they were 5 years ago. And that's not good. And that's really why a lot of people are unhappy modern age, right? If people think they're unhappy because the economy is weak, that's not why they're unhappy. They're unhappy because they have to pay 2, 3, 4x what they used to pay. And again, those prices aren't really going to go back down. The best we can do is stabilize them for a few years and have low inflation for a few years. Have a minor price increases for a few years to kind of slow it and get us back to a mean there. And so, yeah, that's my concern is inflation. And because of that, again, a lot of people this is very subjective, opinionated. But I would much rather inflation not be a problem. Everybody should fear inflation here, in my opinion, more than anything else. Because pretty quickly, $50K doesn't mean much. Earning $50,000 a year doesn't mean much. Pretty quickly, $100,000 a year doesn't mean much. Pretty quickly, $200,000 a year doesn't mean much. And then everybody's unhappy, you know. And again, I don't want us to fast track to that amount. Again, what you really should be doing is hedging and by investing and stuff, right? This is one of the reasons I kind of shame on people always predicting market crashes every other year. is because market crashes don't happen that much. And the only way to hedge against this inflation rise, again, I do this formula pretty regularly on the stream, but it's an important one to understand. The only way to really hedge against inflation rising is investing. You know, let's say you got $300,000. If you do not hedge against inflation, let's say inflation grows by 3% a year. All right, so within 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 30. So within 30 years, your $300,000 is only going to be about $120,000 in buying power because of inflation. If inflation is worse than this, it gets even worse, right? So let's say inflation averages, probably going to be average over 3%. Let's say inflation averages 5%. Right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. If it averages 5%, 300K is only going to be about $61,000 in buying power in 30 years. And so if you do not stick your money somewhere long-term and hedge against this, you are going to be unhappy in 30 years, most likely. And so this is the problem, is that you got to stick your money into something. Personally, there's a lot of ways you could do it. You could honestly invest in a lot of different things. You could invest in gold. Gold has historically outperformed the S&P 500 in a lot of ways over the last 10, 20, 30 years. You could invest in real estate. You know, real estate certainly not passive, but it certainly hedges against inflation as well because home prices typically go up over time. You can ask more if it's a rental property. You can ask more for rent over time as well. And so your rental income is going to increase with inflation, thus hedging against inflation, right? You could buy bonds, a little bit safer, but much smaller yield on average versus the S&P, the NASDAQ, or gold or real estate. There's a lot of ways. You can buy crypto. You can diversify in a lot of different ones, which is my preference there. But if you don't invest into something, you are probably going to lose money over time. Oh, I can type in the chat. Okay, good to know. Appreciate it, Pawn. Thank you, sir. And again, the easiest way to curb what we're in right now, which is a correction or a crash, is to DCA, dollar cost average. Make periodic buys regardless of price over long periods of time, and you're probably going to be pretty safe there. Yeah, I mean, even with a mortgage is a hedge against inflation as well, and I'll explain why. So it can't be adjustable rate, though. So it can't be adjustable rate. It has to be a locked-in rate, and a mortgage will hedge against inflation too. Let's say you pay $2,000 a month in a mortgage for a property, right? In 30 years, $2,000 a month is in theory going to be a lot less buying power, a lot less influential over your checkbook, a lot less significant of a payment for you to make in 20, 30 years because of inflation, right? So in that regard, even a mortgage can hedge against this stuff. But the point is, if you sit on cash, the only hiccup here is if you're retiring imminently. If you're about to retire in the next 5-6 years, then it's a risk, investing in all the stuff I talked about. Then in that situation, I would go with bonds or something, just be really risk averse for a while. But everybody's different. I'm not an investment professional, of course. I'm not liable if you lose money. Always make your own assessment. Trade smart, guys. Can't guarantee anything. Understand CFTC 4.41. Understand all the stuff on screen. Not an investment professional, chat. But yeah. All right, NASDAQ's kind of slowing down a little bit. Let's see 19.9s here. China will find other countries. Yeah, I mean, maybe. But again, like, look, guys, okay. Let me think of the easiest way to put this. You can't just blindly believe everything anybody says. Right? Of course, China's going to be like, hey, we don't need the U.S., bro. You know, we don't need them. Scoff. You know, of course they're going to say this. Does it mean you should believe them? Of course not. Who wants to lose their largest customer? Nobody does, I promise you. If you run a business and you're going to lose 15%, your largest customer that buys up 15% of all your stuff, you're going to be a little stressed about it, regardless of what you say. You might say, oh, it's not a big deal. It doesn't matter. Of course you're going to be stressed about this. Of course you are. Come on now. You can't just, like, you got to context, chat, context. China wants to look strong, you know? And again, same thing with the U.S. saying, hey, we don't need China, you know? Of course we do. Oil's falling down, though. Let's take a look at oil. All right, so the NASDAQ again chopping right here. Kind of boring right now. We ended up taking the short at 950. Nice little short. Rejected right off of my level here. And now we're just kind of going sideways for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes, 12 minutes. Very sideways chop. Apple's starting to fall down. Apple's under the 200 exponential. Now back under $200. Oil is falling down. It's at 59s right now as well. 59s. All right, guys, so yeah, hey, what happened to you, SO, yesterday? There's the guy. You were the one arguing with me about percentages, and then whenever I corrected it, you just didn't say anything. You know? All right, guys, so we're pulling back here. We're at 920s. Going sideways, very choppy. What reaction to the dollar index could have this afternoon based on the Fed pause? Well, the Fed pause is already baked into everything. The only way the decision is going to really move markets is if the statement that they make simultaneously with the decision says anything shocking or outside of expectations, because the decision of a pause is already baked into the market. So unless they do something outside of that, the big market mover is going to be the tone in the conference with Jerome Powell today. That's going to be the big market mover. It's pretty expected that we're going to pause rates today. That is almost certain. It's 99 to 1, 98 to 2, something like that percentage wise. So it's pretty probable. So now we're starting to creep up. We're at 19.93s. Look at this bounce here. I'm not going to take the retest. I don't like attacking the retest of this level here at 950s. Is Tesla coming down? Where's Tesla at right now? Tesla at 277. Still doing okay, though. Do y'all like this playlist better than the original one I was playing yesterday? It's a little bit chiller. I like the music a little bit better, too. 2 p.m. Eastern Standard Time. How much does oil inventory numbers affect price? I mean, they affect things, for sure. Supply and demand, basically. All right, so the U.S. Secretary of State. Okay, he's talked to some people. Yeah, we got 5 hours, 18 minutes left. Apple back over 200. Oil still falling down a little bit. Gold's still up right around 3,400s. AMD had earnings yesterday. They're down under $100. So you're probably talking about the family. He said what happened yesterday at 6 p.m. to make everything spike. You're probably talking about AMD earnings, AMD Supermicro earnings. AMD went up a little bit yesterday. Now they're down some this morning, but they initially reacted positive at 4 p.m. Eastern Standard Time. They went all the way up to 106. They're now down to under 100 though, so they have negatively reacted to this, leading into everything. Apple testing too. Look at oil fall here. It's at 59s right now. 59s. It's a big FOMC day, chat. Let's see what we get. Rivian. I like Rivians too. I've seen them in my area. How much is a Rivian going to cost? Not the shares. What's the fastest truck? How much is that truck, the Rivian truck? 100,000, bro? Okay, I can't do it. I'm just not doing it. Although the 2025 R1. What's the fast one? I'm gonna use one for like 67. AMD great earnings, bad call. Yeah, for sure. The Cybertruck's cool. Alright, so we're up there out at 950s here, chat. 950s. We're almost at 950s. Do I want to short this again? I don't think so. I think I'm just going to wait. All right, so we're up to 950s again. You know, I don't know if the market's going to chop sideways or like what it's going to do leading into the Fed meeting. I think it's possible we go sideways, but we have 45 minutes until the market opens, chat. 45 minutes until we open it. Look, there's 950s again. Rejecting right off of it. Now we're kind of retracing down a little bit here. We rejected right off of that 950 level. Look at that. See if we continue down. What happens here? We broke down a little bit. Yeah, I don't usually attack the retest of it, but look at that level. It's confirmation here. Watch Apple too. Apple over 200s. I got to take a look at Microsoft and others as well. Of course, we're going to stream Powell. That's like my main stream on the channel is Powell. All right, looks like we got a little bit of a wall of sellers up here at 950s. The only way I'd buy a Tesla is if for the self-driving, you know. My wife tends to think they're dangerous, right? I thought they were safe. I don't know enough. Like, my wife tends to think they're dangerous. I thought they were pretty safe, though. Like, I thought that was one of their big, like, bragging points in Teslas, was that they were safer, you know, like bulletproof and stuff. But she tends to think they catch on fire or something. All right, we're right at 950s again here. This has been a level we've tested a couple different times. So now we're coming back down again. I don't usually attack the retest either, so we're just kind of watching the spot. How's the market today? Neutral as always? Well, I think, whoa, look at this drop. Whoa. Some type of catalyst comes out. Look at this red candle here, guys. Whoa, I don't know what this is from. Wow. So we shorted a little bit on our other account, but we're still at 950s here. I don't want to short into this little pop too, but I think I'll wait. I'm trying to look at the other blue chip stocks. There's Apple. Let's put Nvidia up here. Nvidia hasn't really moved at all. Yeah. Yeah, I mean, we're green in both funded accounts today. All right, so we're starting to creep up here. Look, so we're at 950s. Here's the third test of 950s. I'm not going to touch it right here. I'm going to wait. Bond yields. All right, so again, I'm not messing with this. Too big of a chance it's going to break over this spot. All right, so the EU trade chief says the European Commission will announce on Thursday preparatory steps on the next countermeasures to U.S. tariffs. We had Goldman Sachs upgrades Q2 and Q3 copper prices forecast the U.S. dollar 9,330 and 9,150 trillion respectively. Ford is going to increase prices on models produced in Mexico by up to $2,000 from May 2nd, according to Reuters, citing a dealer notice. All right, so here's the move. We're now over 950s. Yeah, the Fed's going to pause. I mean, they're not going to move rates. It's pretty probable that they're not going to mess with rates like that. Yeah, so 2 p.m. Eastern Standard Time, chat. 2 p.m. All right, so we put it up on the chat so people can actually understand. Like, I'll put it up in big yellow letters right here so you can see it. There you go. 2 p.m. Eastern Standard Time. We're starting to creep up. We're watching 75 here. We also got the 200 exponential right there. So I will short that if we get up there. But NVIDIA's coming over the VWAP here. Rivian's actually fallen down some. Do you think Fed is cutting rates today? No. I think it's almost certain that they're going to pause rates. And with that, the attention is going to be focusing on what Powell says during the meeting versus the decision at 2 p.m. So yeah, I think attention is going to go on what Powell says during the meeting versus what the decision is. And again, my guess is Powell's going to be data dependent. All right, chat. All right, look at this 950 level. See if we bounce right here. All right, so we bounced right off at 950s. Do you think we start to see cracks in employment or the economy in general? We could, in the next few months, get an emergency rate cut? No. I don't think so personally. I mean, it could happen, but I don't think so personally because I think if it's versus doing an emergency cut, they would just cut in June or July. So, yeah. So I think versus emergency, they would just cut in June or July. They would just move forward the cut decision versus doing an emergency cut. They don't want to induce panic, and an emergency cut's going to induce panic. So I just don't think they're going to do that. All right, so we're now back under 950s. If we get a little head and shoulders here, we will short again. I wanted the 200 exponential in 7.5, but we just didn't quite get it. So we'll give it a little bit of time here. So look at this red showing up, man. We're getting some red turns in markets. Look at NVIDIA. NVIDIA rejecting right off of that VWAP area. Doesn't look like it's going to be a head and shoulders either. It's just too much red short term. Is Besant. Or Besant speaking at 10? I don't know. Maybe. I don't know. All right, so we're short in our other account here. We took half off already, and now we're slightly flat. Or we're slightly green in this account, actually. So we got a little cushion here. But I'd rather see it flush down quickly here and not, like, move up. There we go. There we go. That's better. Nice. All right, I'm going to go ahead and cut it right there and just jump out. Small gains. We got a little, like a little mini head and shoulders. So we're green in both of our accounts this morning. Looking pretty good. All right, chat, we got 30 minutes until the opening bell here, guys. 30 minutes until the opening bell today. It is the FOMC day, chat. I'm ready. You guys ready? We got the FOMC meeting today, 2 p.m. Eastern Standard Time. We'll start streaming before that, though, so don't worry. But it is the FOMC. I'm excited, man. Feels like it's been a year since we've had an FOMC meeting. I mean, they happen every 6 weeks, but it's been some time. I don't think we have any earnings today that are worthwhile. We got Carvana. We got AMC earnings this evening. Again, I'm probably not going to cover AMC. AMC's just lost so much steam. We got OXY, Occidental Petroleum, AppLovin, Carvana. We got ARM, ARM. It's been a minute since I've seen ARM. Where's ARM at now? 122 still. Doing pretty good, holding a lot of these IPO gains that it made. Tomorrow we got Shopify, Peloton, and more. Thursday we got Trade Desk, Coinbase. What about next week? Next week earnings slow down a lot. Nothing really big. Cisco is probably the biggest one Wednesday next week. We got CPI and PPI inflation next week too. We got Alibaba next week as well in the morning. Walmart in the morning. Kava, Take-Two, Space, a couple other ones, but smaller week for earnings for sure. Nvidia earnings are going to be, I'll have to go back and check, but Nvidia earnings are going to be massive. Snowflake earnings are going to be Wednesday the 21st. Nvidia earnings are going to be Wednesday, May 28th, most likely. The Fed cuts as the markets start to pump. I don't know. That's a nuanced question. The reason it's nuanced is because a cut that's so low probability might shock markets in a bad way. It might make people think that they're nervous, and it might induce panic. Same thing with a rate hike. A rate hike might induce panic as well. Whenever something's this low probability, Powell typically does not want to like shock and jolt the market, so to speak. He would much rather ease into things with expectational, stability, if that makes sense. Look at this big drop right now coming in markets. The 8 a.m. scrum showing up right now, or the 9 a.m. scrum. Getting some dips. Disney seeing robust demand for advertising ahead of New York upfront presentations here. Hey, thank you, Valentina. I need 2,000 profit today. Good luck, bro. Yeah, when's Jackson Hole? All right, so look, we're coming all the way back down here. We've been in this, like, we've kind of got like an expanding range right here in markets. Like, look, kind of expanding in range to markets right now. So we'll see what we get, chat. We'll see what we get. 30 minutes left. 30 minutes. Effective Fed funds rate at 4. And yeah, they're basically everybody thinks we're going to pause rates. The European Union, again, 10 minutes ago, we got the European Union's trade chief talking about how the European Union is going to announce preparatory steps to on the next countermeasures to U.S. tariffs on Thursday, tomorrow. So we'll see what happens. NASDAQ has moved all the way down to the lows of the day right now, lows of the day. We'll see what happens, but... No, the market is not expecting a rate cut. Again, so Harry, the market is not expecting a rate cut. The market is 97, 98 to 2% likelihood. So it's literally 98 to 2% likelihood of a pause today. There's only about a 1 to 2% chance of a cut. Overwhelming chance of a pause today. Like, that's what it is. So again, not very probable we're going to cut. Overwhelming chance of a pause. That's today. All right, so we're still trying to pop back up. Yeah, it's going to be a pause today. All right, Disney says cruise lines will become a driver for the business in the next 3 to 4 years. Market is very flat right now. Watch Nvidia and Apple though. Apple under $200. We got 25 minutes into the opening bell chat. We'll see what we get. Amazon is going to invest $4 billion to launch infrastructure region in Chile. Yeah, I saw your reclaim. We'll see, bro. Don't worry. If we bottom there on the S&P, I'll give you credit. All right, guys. Testing lows here. Again, biggest stories of the day. Let's talk about it again. We talked about it a little bit earlier. We're going to talk about it again. Biggest stories today. Fed expected to hold rates at 4.25%, 4.5%. Pause rates. They're not going to cut rates. They're not going to raise rates. They are going to pause interest rates today, which is kind of a neutral stance, which follows the theme of the Federal Reserve over the past few months, really. Neutral, data-dependent Fed, not really making any big decisions. Going to wait and see what the economic reports, inflation data, and such show up as before they make a decision in terms of interest rates. Look at this drop. So NASDAQ's falling down to 900s again. Here's 900 right here. Let's see if it holds. During the press conference today that, again, we're going to stream completely live on the stream. We cover all of these things live as soon as they happen. So, again, during that interest rate press conference, the big thing is going to be on forward guidance, post-meeting statements. They're not going to do a dot plot today. That happens quarterly. But post-meeting statements, what Jerome Powell says during the press conference that we're going to stream, all that stuff live. Clues on inflation, labor market resilience, balance sheet strategy. We're going to look at economic projections, specifically on updated GDP, PCE, unemployment forecast, how the tariffs are affecting outlook, heightened Fed caution potentially amid potential price pressures. S&P futures are down slightly. We are breaking down under that 900 level. So the NASDAQ is flushing down, breaking lows of the day just now. So NASDAQ is flushing down, breaking lows of the day. It's under 19.9s here. It's under 19.9s. You know, the Bank of Japan, the ECB, Bank of England are all kind of following our lead here with interest rates, taking a cautious stance, data-dependent stance. They're not going to release a dot plot today. The Fed only issues the summary of economic projections, the dot plot, at its quarterly meetings, which is March, June, September, and December. So we're not going to get one today. We will get one next meeting in June. Yeah, I don't drink really. Not like... I drink socially if I'm at a wedding or like a, you know, social gathering of some sort, sure. Dude, I don't think I've ever drank alone ever in my life, ever. I feel like I would feel bad if I did. You know what I mean? Like, again, I'm not judging you if you do, but I'm just not a big drinker. Like, I just don't drink like that. I've seen it, like, look, as I'm getting older, right? I'm in my 30s. I see a lot of my friends' parents drink way too much. I don't judge people if they drink, right? Like, I get kicking back, hanging out with friends, doing whatever. That's fine. I'll drink in those situations. But I'm not really going to drink alone by myself. Like, that sounds ridiculous. And again, too many, like, I've seen some of my kids, like, friends' parents. You could tell, like, every day they're looking to bring their kids to a restaurant so they can drink. Like, they're getting drunk everywhere they go. Everything they do, you know, they have to drink. And at a certain point, you can tell, like, they get sick if they don't. That sounds like a miserable time. Like, imagine having to drink, and if you don't, you get sick, right? That sounds terrible. I'm just not trying to I'm not trying to have that happen to me. And so I've never been a big drinker. Not judging you if you do, of course, but it just doesn't seem like a fun thing to be addicted to, personally. Yeah, NASDAQ under 19.9s. Under 19.9s. Okay, bro. I got you. Yep, I heard your reclaim. All right, so China's BYD and others have informed authorities of intent to withdraw plans for lithium processing plants in Chile, according to local newspapers. That news just came out. Look at the NASDAQ still fall down. Let's watch 875s now. 875s. But again, NVIDIA breaking lows right here. You can see it. NVIDIA breaking lows of the day. Apple cracking lows of the day. I think it's lows of the day for Apple. Yeah, Apple cracking lows of the day for Apple as well. Coming down. Watch 875s potentially. Yeah, I'm not judging anybody if they do pawn. Like, I'm really not. Like, I get it. We all have our vices, bro. Like, I get it. It's just personally not something I want to do. I like to be productive, and I think it affects productivity. I'm thinking maybe I should short 19.9s. AMD reacted initially positive for their earnings report, but once the earnings call happened, they came all the way back down under 100 now. I want to short 19.9s here. Yeah, for sure, right? 100%. Hey, congrats, though, brother. Congrats. All right, we're at 18.8.9s. How can you make such a probable prediction without insider information? I mean, I'm not sure what you're arguing about, Harry. I think somewhere you've been misled into thinking that we were going to cut rates today for some reason. I don't think you're necessarily tracking. So here's something you need to understand. Looking at the CME watch tool, this is insider information, bro. This is most analysts' expectation of today, right? If you look at this 15 minutes before the Fed decision, it has not been wrong in a long time. A long time. I'm not saying it can't be wrong, but this is insider information, bro. 99 to 1% chance likelihood of a cut. 99 to 1% chance likelihood of a pause, I'm sorry. So we are almost certainly not going to cut today. Whatever made you think we were going to cut today, I'm sorry, you're wrong. Now, again, you could stay stubborn on that for whatever reason and just ignore the huge likelihood that you're wrong, or you could argue like we're wrong. That's fine. But again, if you think we're going to cut today, you are drastically wrong, because we will not cut today. We will pause interest rates today. Almost every major finance analyst in the world understands this. Learn how to watch the CME watch tool to gauge Fed decisions and reactions, bro. It's all love here. He must be the 1%. Yeah, maybe. All right, guys, so we're starting to break down here. We are at 19.9s here, 19.9s. Look at that rejection. I should have shorted this little pop. Yeah, I'm going to go ahead and ban Reclaim. I've asked him to stop spamming the same message over and over and over again all day. He keeps doing it. Good day to you, sir. Have a great day. All love until you're wrong. I mean, I could be wrong. If I'm wrong, I will eat my words today for sure. And again, there's a chance we cut. It's just not freaking probable of a chance, but there's a chance. So you're saying there's a chance, is what I'm saying. 70% of the time, I'm right every time, guys. But again, in terms of almost every major finance analyst in the world right now, definitely top 3, 99 to 1% chance likelihood that we're going to pause. Anybody betting on a cut today has no understanding of finance. Anybody that you watch on YouTube that's telling you we're going to cut rates today has no understanding of finance. No understanding of probabilities, no understanding of likelihood. And if I eat my words today, I'll eat them. But looking at the percentages and the probabilities, we are not going to cut rates today, guys. Again, I don't think we are. Maybe, who knows? Okay, so the European Union is going to announce provisional list of tariffs against the U.S. on Thursday. New European tariffs to be enforced if talks with the U.S. fail, according to Bloomberg. Yeah, the third most rightist right-er in the world right now. When I look at the top list of the right, I'm in there for sure. Definitely top. Yeah, bro, this is, and honestly, guys, anybody that watches my stream regularly, you'll remember me saying this exact thing multiple times before. Okay, multiple times before. All right. What I'm going to say is that it's very easy to predict what we're going to do for a Fed decision. It's very easy. Okay. All you have to do is watch the CME watch tool leading into the Fed decision, and you will know what the Fed's going to do within, most likely. Now, listen, if the rate cut odds were 40% and the rate pause odds were 60%, then you could argue we're going to cut. But for whatever reason, every single FOMC meeting, you got a bunch of people that are pretty new to the FOMC watching FOMC decisions, pretty new to economic policy. They come out here and they make some wild prediction, like we're going to cut today with 1% chance odds, right? And every single time, they're usually wrong, and then it ends up being kind of like a cricket scenario where they just kind of turn silent. You know, and you got a bunch of YouTubers for whatever reason that make these wild predictions that go against the most probable expectations. And I don't understand why. You know, again, we are going to pause rates today. If we don't, you can call me dummy for a week and I can only respond to dummy in chat. And I'll follow through with it. All right. If we cut rates today, you can call me dummy for a week straight and I'll only respond to dummy. That's not going to happen though, because we're not going to freaking pause rates, or we're not going to cut rates today. Yeah, we're going to stream the Fed meeting. Yeah, all good, Harry. Again, you got to understand. And again, Harry, I can tell you're new. It's all love here, bro. Like, I mean, obviously I'm trolling you a little bit, but if you're new, just watch the CME watch tool, brother. You know, here's the problem. This is what really leads people this way. Is people look at what Powell said 3 meetings ago, 4 meetings ago, 5 meetings ago. If Powell says, hey guys, we might cut rates this many times, and he said that 6 months ago, they hold on to that prediction. Instead of watching each consecutive FOMC decision and meeting and press conference and listening to updated guidance on this stuff, they watch him 4 months ago where he says we're going to cut more than he said we're going to cut right now. And they hold on to that prediction. And then they start betting on that prediction versus what the updated data shows and all this different stuff. And it just leads them astray. The easiest way to watch it is just watch the Fed Watch tool, the CME Fed Watch tool. Look at it 10, 15, 20 minutes before the Fed decision. It's going to tell you most likely at least what the market's going to do. With that said, though, I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Might be wildly wrong. Some would say I'm the top 3 most wrong trader of all time ever in the world right now. But understand all the stuff on screen, not an investment professional. Understand CFTC 4.401. Sometimes I trade and lose off stream. You might not see it. Don't copy me. I have no idea what I'm talking about. Why would we not start quantitative easing? Inflation down, pressuring him to cut rates. Well, we're still doing QT right now. So I don't know if it was the last Fed meeting. I think it might have been. So the last Fed meeting, I'm pretty sure Powell and the Fed announced an 80% reduction in Treasury QT. So they didn't start QE, but they reduced the quantitative tightening that they were doing, the reduction of their balance sheet in Treasuries by 80%. So they 80% reduced the reduction of their balance sheet. But with that in mind, they kept mortgage-based securities the same. So they're still reducing their balance sheet of mortgage-based securities, which means that interest rates in mortgages might remain high, is what that means. But they're not doing QE yet. You have to understand this. Somebody's asking, why don't they do QE? QE is a more desperate thing versus lowering interest rates. And so if the Fed is not willing to lower interest rates, they're much less likely to do QE as well, because the QE is a more desperate decision. An example is 2020. The Federal Reserve lowered interest rates, but it was a more desperate thing than just lowering interest rates, like lockdowns, all the stuff going on. And so in that regard, they needed to bring interest rates down faster. And so that's when they stepped in and did QE, but it was a more desperate decision versus just straight up lowering rates, cutting rates. And so they're going to do QE and stuff like that if we get if they're super worried about a recession, labor market weakening, all that stuff, that's when they might step in and do QE, but I don't think they're going to do it this meeting. Although, who knows? Maybe they do. I don't know. If they do, it'll be a bad sign for the economy. But it might also kind of help things, too. We'll have to wait and see. The problem is QE causes inflation a lot more than anything else. So QE is just money printing, creating online bank reserves, and then using those bank reserves to buy up a bunch of bonds and other financial assets, injecting liquidity and bringing interest rates down. The problem is that that's one of the things that causes inflation. And so I think the Fed's going to be a lot less likely to do the one thing that might cause worse inflation problems versus just straight up cutting rates. All right, so we're now back under this level here. Do I want to short this? I kind of do. We'll try it. We got a couple minutes into the open. All right, we got a little follow through here. Quantitative easing is when the Fed creates online money and then uses that online money to buy up a bunch of bonds and other financial assets, injecting liquidity into the bond market and the economy. Eesh. All right, so we're short. I'm gonna go ahead and cut this. I just don't like it. It might reject here at 9s, but I'm just gonna get out there and just stay green in both of these leading into the open. I don't know. I mean, I think we could justify a cut based off of the data. I think we have better inflationary data, and that kind of opens the green light. We got GDP showing up negative in the prelim data, so I think you could argue a cut, but I think the Fed is going to argue it this way. The Fed is going to say payroll showed up stronger than expected at 177. We see more labor market resilience, so that kind of cancels out the need to cut rates. Like, the Fed's going to cut rates if we got deep economic weakness, right? The question is, do we have deep economic weakness? Subjective, but I would say kind of. We got GDP showing up negative, but payrolls on the other end to counter that showed up stronger than expected. Unemployment's still pretty low, and so I think it depends. I think it depends. I think it's subjective, and the Fed's going to argue, no, we don't have the economic weakness we need to justify rate cuts. So, yeah, I mean, they're going to be data dependent for sure. For sure they're going to be data dependent. Again, hit the sub button, hit the notification bell. We are going to stream live at the opening bell. We are going to stream live at the FOMC meeting today at 2 p.m. Eastern Standard Time. We are going to stream everything live right here on YouTube for free. Doesn't cost anything. We don't sell a course. We don't sell a service. We don't claim to be good traders. We give everything to everybody for free right here. Subscribe. Hit the notification bell. Help the growth continue here, chat. We appreciate the love. Thanks so much. We got 6 minutes until the opening bell. About 6 minutes. Yeah, Disney pumped up. Yeah, not yet. Yeah, I think we're going to cut rates eventually, of course. Right now, it's looking like July is going to be when we cut. A week or two ago is June. But I think the strong payroll numbers push back the odds of a rate cut more. We had payroll numbers come out strong. That's probably what pushed everything back. All right, chat. We got basically 5 minutes left. Bullish or bearish open today, chat? Bullish or bearish open? We got 1,500 votes here. 38% think hawkish. 34% think neutral. 27% think dovish. So most people think we're going to have a hawkish restrictive tone. All right, so there's the poll. Are you bullish or bearish for today's opening bell? Look at this bounce right off of 19.9 here. All right, chat, we're at 19.9s. Oil still down a little bit today. Here's 9.15s. This might be a level 2. Kind of got a little sideways trend here.
All right, we got AMD rebounding. AMD's back over 100, so that's good. Rivian bouncing back. ARM is down there. Microsoft. We're going to look at Meta. Netflix. Amazon. Once people hear no rate change from the Fed, it'll influence volatility. Probably, yeah. Yeah, 52% are bullish, 36% are bearish, 12% are neutral. And again, so just to give you guys kind of the procedure of things, right? So whenever something's overwhelmingly probable, like a Fed pause today, the eyes go towards what Powell's tone is like. Is he restrictive? Is he loose? Is he data dependent? Is he neutral? Like, that's what everybody's going to kind of pivot to, is what is Jerome Powell's tone. Look at this drop right ahead of the opening bell. Whoa, look at NVIDIA drop. Apple dropping right ahead of the opening bell. We got about 2 minutes left. U.S. envoy Witkoff will be briefing UN Security Council in Gaza. Look at this drop. Again, look at NVIDIA and Apple dip down too. Quickly here, chat, quickly. Right. Yeah, and I appreciate the love, guys. Like I said, I do want to say I appreciate you guys. We cover a lot of this economic reports and data. We got 1 minute into the opening bell. Channel's growing a lot, man. Like, my normal streams are getting over 1,000 people. They're growing slowly but steadily, and I appreciate you guys. Thanks so much. Shout out to you all. Appreciate the love. Really do. We got the FOMC decision today. It's a big day. Let's see if we reject 900s here. Look at that. Right off of 900s. Warren Buffett fell behind Pelosi in stock market returns over the last 11 years, according to the data. Amazon just broke lows. So we are seeing tech come down here. Microsoft's actually bouncing right now, though. So is Meta. This drop mostly is Amazon, Apple, and NVIDIA dropping right now. Yeah, we already hit 160K. I appreciate the love, though. Thanks so much. Yeah, AMD's up. Microsoft's up. Meta's up. All right, guys, here's the bell. 5, 4, 3, 2, and 1. Here's the bell. All right, there's the open. NASDAQ rejected at 900s here and then retraced back up. We have NVIDIA starting to go green a little bit since the opening bell. AMD spiking up big to 103s. We got Netflix sitting at 1140s. And the NASDAQ is still falling down some as NVIDIA turned. Look at this drop. Look at this drop. NASDAQ testing lows of the day here. Just crack lows of the day. Let's see if it bounces at 7.5. There's 7.5. Looks like it's going to flash right through this here. Maybe not. Yep. I'm going to wait at least a couple minutes until we trade. AMD completely retraced all the way down. Went all the way up to 103s and then retraced all the way down about 2.5% down to $100. And now the NASDAQ is tumbling down. Apple is falling down as well here. Meta's turned. Microsoft's turned red. Amazon's gone red down to 185s. Google's still pushing up though. But market is red at the opening bell today. Red at the opening bell. NVIDIA's kind of flat though. Apple is what's really red. Apple just went red on the day as well under the previous closing price. Definitely seeing some redness at the opening bell here. Look at that retracement back up. Again, my hands are off right now. It's way too volatile, especially on FOMC day, for me to mess with this for the first 3-4 minutes after the bell. We got to let that settle down a little bit first, I think. Netflix is up. Meta's up. Amazon is up to 185s. AMD up to 102s. Look at this retracement all the way back up here, Chad. All the way back up. This is mostly driven by Netflix, Google, Amazon, AMD rebounding back up a little bit. So a lot of the Mag 7 rebounding back up over the last 30 seconds, 20 seconds. Very volatile day. Y'all be careful, chat. Netflix pumping, Amazon pumping, Google testing highs of the day. AMD up there as well, 102s. Look at that rejection at 915s. We talked about 915 being a level, guys. Look at that. I kind of want to buy that dip, but it's too early after the opening bell. I would have bought that dip. I'm going to have FOMO if it goes up. Nvidia's right at the VWAP here, though. Amazon retracing a little bit. No, there's a drop here now, too. It's going to buy 9s. Oof, bad fill. All right, I am out. I just cut that very quick trade. But we are out. We made a little bit buying this dip at 9s. Very volatile price action, though, here. Amazon's ripping up, too. Netflix is up. There's the 900 dip again. Nvidia looks like it's coming over the VWAP here. Apple went green on the day again, but it's right above the previous closing price. Again, we're about 2 minutes into the open, or 3 minutes into the opening bell. Here's the third retracement back down to 9s. I'm not going to test it again. Netflix is up there. It's at 114 or 1146s. AMD's trying to make a move too. Microsoft is as well. The problem is that Apple and Nvidia are kind of flat on the day relative to the opening bell. So Nvidia and Apple kind of pushing us back down here. And again, sometimes leading into the Fed decision, we get chop. We'll have to wait and see. Yeah, I don't know if the tariffs news is going to end. Over the weekend, the U.S. and China are getting together in Switzerland to talk about de-escalation. And so I'm hoping they get a deal done. But we'll see. Nobody knows. John, you always take the elevator, never the stairs. I mean, I went long on that last trade. I got out quick, though, because I was worried about a reversal, which is now what we're seeing here. So looks like exiting where I did was the right move on the long side. We're getting too close to the low of the day for me to win a long here. All right, guys. Still waiting. Still waiting. We just got to sit tight. There's a big retracement back up, but I could short this. Should have shorted it. We're getting too close to the low of the day for me to long. Looking at our poll, 52% are bullish out of about 300 votes. Ugh, dude, my nose is still stuffed up. I've been on Afrin because I've been sick. But, like, the problem is that your nose gets used to it. And so... All right, here's a test of the lows at 875s. Apple under 198s here. Apple just cracked lows. Break it down now. Meta broke lows as well. Testing lows of the day. Palantir? What's Palantir doing? Palantir's moving up. It's at 109s. We bounced right here at the low of the day. Bounced right at 875. We're about 6 minutes in. I'm too worried about sideways action here. It looks like we're going to crack lows right here. It's so hard to tell, though. And the retracements are so big. Look at that retracement back up. Yeah, look at that big pop. Bounced right at the low of the day here. Problem is, like, we could go up or down very quickly right now, very fast. Hood and PayPal are doing great. Yeah, so Corey, so we already talked about that. So that came out way earlier, Corey. So the news is that in Switzerland this weekend, they're going to have talks on de-escalation of the tariffs. It's not going to be the president. It's going to be representatives. It's going to be Bassett and one of the Chinese reps this weekend. Hopefully they get a deal done, but that's what it is. Look at this retracement all the way back down. Right now we're so flat and sideways, it's hard to make a bet on the direction here. I'm going to go ahead and short this. There we go. See if we can crack this low with me in it, and then we'll try to hold the rest kind of break even here. We're down here at lows. It's taking too long. We cut it. Got out flat. It's retracing up too much at these lows. Yep. Good. Avoided that. Yep. Good. Amazon's still ripping up. Amazon is up to 187.50s. The rest of the market's kind of looking weak, though, so I wouldn't mind making a short up here if we get up here. But... all right, so we're going to short it right here. Very small trade. See if we can add to it if we get into the green. There we go. I'm going to cut it down here. Pretty good so far. There's the breakdown. Amazon's what's dragging up, but we're kind of attacking ranges right now very quick. Yeah, I mean, it's ahead of the FOMC meeting, chat, just to clarify. So a lot of times markets are flat, sideways, boring, kind of neutral ahead of these reports. All right, so rebounded back up, so we got out of that in time. All right, creep it up. Apple heading towards that previous closing price. It does look stronger now, but it's so volatile. Palantir, guys, with a huge run. Look at PLTR. Up to 111s right now. Flying up. And I think Palantir's on the NASDAQ as well. So I think Palantir is listed on the NQ. Your trade entry and exit prices are so close. I mean, most of these I'm up like 10, 20, 30 ticks. It seems close because I'm zoomed in, and they're quick trades, but we're usually getting pretty good tick to profit ratio. But AMD up to 101s. Yeah, Palantir's up. Look at this. Market just broke highs of the range, at least since the open. Bro, check out my indicator. So this is a 5-minute indicator. All right, just to clarify. I call it the Scalp King, but just look at this for a second. Okay, I call this the Scalp King. Look at this for a second. Do not copy me, not an investment professional. I'm not liable if you lose. All right, this is just my own programming. But look at this. So this is the latest one. Boom. Green. Look at this. Let me zoom out. Look at this one. Green. Look at this. Literally almost the bottom. Bounce. Bottom. Bounce. Bottom. Bounce. Bottom. Bounce. Bottom. Ooh, this one bounced too. So I don't know why they're not showing up red very much. Look. Bottom. Bounce. This one probably didn't work. So that's one that didn't work. Look at this one. Right at the top. Literally the top. Boom. Top. Boom. Look at this. Literally right at the top. Boom. Right at the bottom. Boom. Right at the top. I gotta start using my indicator more. I'm not even really using it to trade. I should be, though, based off of this. You missed the spread cost. Yeah, but the spread in the NASDAQ is what? 1 tick? So if I'm making 10 or 20 ticks a trade and the spread is 1 tick. You know? Nah, excess people are going to have to figure it out. That's all subjective. And it does work every time, but like the accuracy, man. On a 5-minute candle. The 1 minute is less accurate, I think. Look, here's the 1 minute. Honestly, the 1 minute's not bad either, though, but it's definitely a little bit worse. But I don't think it's meant for a 1 minute, in all honesty. Like, look. 1 minute, boom. 1 minute, boom. 1 minute, bounce. 1 minute, bounce. 1 minute, bounce. Top, 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 bottom. Honestly, 1 minute's not bad either, to be completely real. It's not meant to signal entries and exits. It's meant to show where strength is showing up and where tops and bottoms might be. All right, but look, we're rebounding back up here, chat. We're heading up. It's one candle later, so no. It's not 3 to 5 candles. Right, so 1 tick could be 10% of your cost. Yes, but again, I mean, look, I'm not sure why you're arguing. I think at this point you're just trying to be right. And it's all good here, but if it's 10% of my costs, how is that going to cancel out? How is your statement about I'm surprised that you're making money per trade when you calculate the spread of the, you know, like if it's only 10%, 10% is small. Are you trying to make it seem like 10% is huge or large? You know, I would say 10% is pretty small. But again, it's all love here. It's all good. I'm not trying to argue. I wonder if I should try it on Bitcoin. I've never really tried it on Bitcoin. Let me see. Bitcoin, US dollar. Wow. On Bitcoin, dude. Maybe I should be trying it on Bitcoin. Look at this. Follow through, follow through, follow through, follow through. Bounce, bounce. This one didn't work right here, but still. This one did, this one did, this one did, this one didn't, this one did, this one did, this one did. Pretty impressive. I like my indicator. All right, look at this turnaround here. Let's see if we bounce at 9s. I'm curious about it. Not arguing, just putting my point across. Which is? Let's hear it again. I'm curious. All right, I should have bought 9s. I was really thinking about it too. A little late now. I'm spending too much time debating the chat. What's a good amount of profit to take every way, or to take profit and step away? It depends on the person. Everybody's different. Depends on the size you're using. Depends on how much you're comfortable with making. Depends on all that stuff. Never mind. Okay, yeah. Anyways, here's that 915 level. See if we bounce. I wanted to buy 900s. I should have. Gold. Let's see if it works on gold. I'm curious too. I mean, it's much less. I mean, okay, so here's it on gold. Right? I don't know if I'd say this one worked. I would say this one probably didn't work. Let's back test it. All right, so it's 1 for 1, 2 for 1, 3 for 1, 3 for 2, 4 for 2, 5 for 2. I call that one 6 for 2, 7 for 2, 7 for 3, 8 for 3, 8 for 4, 9 for 4, 10 for 4, 10 for 5, 11 for 5, 12 for 5, 13 for 5, 14 for 5, 15 for 5, 16 for 5, 17 for 5, 18 for 5, 19 for 5, 19 for 6, 20 for 6. So it worked 20 times versus 6 fails. So still pretty good on gold. I would say it's a little less accurate though. But again, I'm still building it. I'm still building it. I like your style. Thank you, sir. Definitely top 3 stylish styles in the world right now. All right, guys. Nasdaq's up, bouncing right there at 915. We did bounce. Apple has had 1, 2, 3, 4, 5, 6 green candles in a row. As I say that, though, look at Apple turn. Whoa. Look at this candle, guys. Part of me thinks that my hand should be off right now. Do you sell this magic indicator? Top 3 most magical ever. Majestic, I would say. We're breaking down. We're at 885s. 875s. Nasdaq had some type of news that just came out over the last few minutes here. AMD CEO says China export controls are a headwind of $700 million in Q2 and $1.6 billion for the fiscal year. U.S. Vice President Vance says there are no conversations between the U.S. and China regarding a strategic deal of Taiwan. The president posted on social media, which is critical. Okay, that doesn't really mean much. Says I don't know what's dragging this down. I don't know what this is. Could be any of those news releases I reported here. Yeah, I'm still working on it. I'm not going to tell you guys how I got these indicators. I programmed them though. And I don't know what I'm going to do with them yet, so. All right, we're retracing down here. I don't know if it's the AMD news, probably what it is, I'm guessing. AMD news probably was tanking markets. Fair enough, you're onto something. Yeah, no, it's a good indicator too. I also made sure it didn't repaint. And so, like, these are not repainted signals, like, you know, so it's pretty solid. All right, we hit 9s. Now we're retracing back down. Yeah, what I will say is that there are a number of different things combined. Like, it's not like we're just using one indicator to get those. Like, there are a bunch of different nuances of trading combined. Okay, so US VP Vance says they think there is a deal that would reintegrate Iran into the Iran into the global economy. I saw a social media post criticizing how people pronounce Iran, and I felt personally attacked by it. And so I'm going to make sure I pronounce it right now. Yeah, nobody's going to tell you what to buy. I don't know, Vegas. We'll see, bro. NASDAQ 100's decline today is attributed to heightened trade tensions, anticipation of the Fed. Yeah, I mean, honestly, guys, we're pretty flat. Like, it's not like we're down huge. Here's the opening bell right here. And then here's the market since the opening bell, right? So we are in a sideways, boxy range for the first 25 minutes since the opening bell here, chat. Like, that's what we're doing. And again, we are going to be streaming live at the opening bell today. Or we're going to be streaming the entire Fed meeting live right here, as we always do. Okay, we are going to be streaming the entire Fed meeting live right here as we always do. We will have probably over 4,000 to 5,000 people watching this FOMC stream. Probably over 4,000 to 5,000 people watching concurrently, simultaneously. I'm going to go with we're going to have over 5K watching simultaneously. So stick around, subscribe, hit the notification bell. It'll be a fun stream. Yeah, most people say Iran, like I-R-A-N, but the correct pronunciation is Iran. I'm pretty sure. I might be wrong here. Top 3 least geographic pronunciation experts in the world right now, so I don't know. All right, we're very sideways and flat here. I would short, to be honest. I like a short better, but who knows? Don't copy me. Not an investment professional. All right, we're starting to creep back up. Okay, so US VP Vance says that the president would be open to sitting down with Russia and China to reduce the number of nuclear in the world. So Vance is speaking right now. I'm wondering, he's probably the one that's influencing the market. Again, it's too choppy for me to be interested here. All right, guys, we got the Fed meeting today too, so y'all be ready. Big day, honestly. And again, guys, if you haven't already, check out Top Step. We are green in 2 of our funded accounts today. We didn't trade on the other one. The other one, we're still waiting for the withdrawal to process, or the payout to process. But again, if you have not already, subscribe, hit the notification bell. Check out Top Step. Top Step, if you want to learn to day trade, personally, you should not be funding your own account, especially thousands of dollars, because let's just be real, you're probably going to lose in the first year or 2. This is almost inevitable for new traders. It's called market tuition. Almost all new traders lose. And so you can either fund your own account trying to look cool in finance and probably lose, or you can try Top Step's funded account program. Number 1, the futures market, very similar to day trading stocks. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, commodities, some currencies. No PDT rule. Gets you around the PDT rule completely. And again, the best way to learn is this way. It gives you a structured environment with tons of resources to learn. They give you a 50K demo. They test your skill with a 50K demo. If you pass the test, they fund you $50,000 with a 90% split. You got to make $3K in profit without losing $2K first, following their rules, a reasonable 2 to 3 ratio. If you do that, they fund you $50K with a 90% split. Prior to that split kicking in, you get to keep your first $10K in profit. Very similar to funding your own account in terms of split. If you fail versus funding your own account, instead of losing thousands of dollars, if you fail, you lose the base amount, which is $50 a month for the base one, $100 for the middle one, $150 for the top one. It just makes sense to learn this way. And most day traders are going to lose regardless of where they go, including here. It's a lot cheaper to lose here. Similar reward if you fund your own account. So in my opinion, it's limited risk, similar reward to funding your own account. And they pay out hundreds of millions. They fund thousands. If you use TopStepX, there's zero commission as well and only small amounts of fees per trade. And so if you go through my link, use TopStepX. Zero commission, tiny amount of fees per trade. But again, guys, they're an affiliate of mine. I am biased because I get paid by them. Not an investment professional, not liable if you lose. Always make your own assessment, trade responsibly. Here's the link. Check it out if you want to help support the channel. We appreciate it. Understand all this stuff on screen. I get paid by them, so I'm biased. Some would say I'm the top 3 most biased ever in the world. But there's the link in chat right now if you want to check it out. Here's the 200 exponential right here at 940. Let's see if this level rejects. We already rejected a little bit off of it. Here's 940. But again, Palantir ripping up. Amazon ripping up today. Meta's kind of sideways. Microsoft starting to bounce back. AMD is red since the opening bell. No, I'm gonna dip for a bit and come back, Daniel. Again, I'm gonna cut out for a little while and come back, most likely. We got the Fed meeting today. It's a huge day in markets. A huge day in finance. Hey, have a good day, Sam. Good day, brother. Yeah, hit that sub button, guys. Hit the notification bell. We got Powell day today. Huge day. Big market day. Looking at 19940s. Be ready, Chad. Be ready. We're about 30 minutes into the opening bell. Again, the Nasdaq's rebounding back up. Look at Palantir rise, though. Palantir almost up to 112s. Right now, almost up to 112s. Yeah, Uber missed earnings. AMD ended up reacting positively to the earnings release and then really negatively to the earnings. Like, look. AMD. Really good initial reaction to the earnings, and then they reacted negatively to the call, and we're kind of flat here. We also had Uber, which is down big after missing revenue forecast, I think. And then we also had Supermicro Semiconductors, which I'm pretty sure is down still, but it's starting to rebound back up. So Supermicro reacted negatively, although it is bouncing right around $30. So that's kind of the market right now. Palantir pumping up, Meta testing the highs of the market range, of the opening bell range. Microsoft is as well, testing highs of the opening bell range. Hit the sub button. Do it now. Try it one time. Might feel good. Everybody's doing it here. Hit the sub button, guys. Hit the notification bell. Peer pressure here. Come on now. All right, we're bouncing off at 915s. Yeah, irregardless of whether irregardless is a word or not, I'm going to use it. Okay? Irregardless of whether it's a word. All right, we're bouncing after 915. Here's the 200 exponential. We got 950 above us here as well. Again, I'm thinking we might have choppy, like, boring action. We'll see what we get, though. But yeah, hit the sub button. Hit the notification bell. We appreciate it. All right, guys, so we're dipping down. We bounced right at 915. Again, we got the FOMC Federal Reserve rate decision, 2 p.m. Eastern Standard. All right, look at us, guys. We are at 930s, 925s. Still kind of chopping sideways. I'm going to go ahead and cut out of here, guys. Listen. Y'all be good. I love you all. We will be back within a few hours covering the full FOMC stream. So listen, if you have not already, everything we do here is free. We don't sell a course, don't sell a service, don't even claim to be good traders. Drop economic reports, earnings, all that good stuff live for free right here every single weekday morning. We are going to stream the entire FOMC meeting, the entire FOMC decision. And not only that, we're going to break it down in an understandable way so you can understand what's going on in the economy and markets, how it might impact everything, what it all means. And we're going to stream it all in its entirety. We get thousands and thousands and thousands of people that tune in for this stream. It's a big day. It's a big news report. We're going to break it down as well as stream the entire press conference live in a few hours. Be ready. I love you all. Y'all be safe. Have a great day. Y'all be smart. We might get choppiness leading into the day, in today's FOMC decision. So just be careful, guys. We'll be back in a couple hours. Hit the subscribe button. Hit the notification bell. Yeah. Hit the subscribe button. Hit the notification bell. We appreciate it. Also, if you want to check out the, here's our FOMC stream if you want to join the wait list. I'll put this up in chat right now. Again, hey, I love you all. Have a great day. I'll see you guys. All right.